Alright, I want to show you the update for Capstone Portfolio 2010 for June. What we're going to do, also the results for May. Let's first look at the results for May. It was the first down month of the year for this portfolio selection. Minus 2405 is what the final results show. Looking at the total results, 351, 335 over a max drawdown of 10,220. This max drawdown is slightly different than last month. Sometimes TradeStation has data corrections, and so we look back and reload all the data and then calculate it out. There's a little bit of a difference here. Let's take a look at last month's report. Pull it in here into the screen. It shows the PDF on the website shows 355, 392, and then 9,900 for a drawdown. So there's about a $320 difference in drawdown. That we didn't have a new max drawdown. The drawdown, this drawdown right here that you can see, this spike low right here that you can see is $320 lower on the other chart. So as you can see that, let's scroll down. You can see that what I'm talking about. Pretty cyclical drawdown curve. It's one of the things we look for. And so we did have a drawdown. It could be a good place to enter. I am making a change to this portfolio this month, and I want to explain why. I want to show you how I do this. It gives us another opportunity. First of all, I want to look at this number 3437.72. What is that? That is the total profit over the max drawdown, and this is since January of 2005. Let's look at this current drawdown, 27.75. So we're going to tap those numbers in, 34.37, and then is the return over drawdown, and then 27.75 is the current drawdown. And so we'll do return over drawdown, and then the current drawdown. And then I want to take a look at what changes we're going to make. I am taking out the Python for the stock indexes. This strategy has worked well for years. It looks at the data too, which is the PIT S&P. The volume in that is decreasing over time, and when you compare that with the results with just looking at the E-mini S&P, which has more volume, or the SPY, which are all correlated, the results are not as good. And so the reason for trading this is not as valid as it used to be in the past. So I want to take this one out. I want to take one system out and add two systems. We're going to take out Python ER. We're going to add Viper Bonds, and we're going to add Cobra 2 ER. And the return over drawdown increases 38.69 compared to 34.37. The current drawdown is also more. So this also gives us an opportunity to get in at a lower price. So we're getting in at a lower price by getting in at a greater drawdown. So this is one of the ways I look when I transition. I try to find ways to transition where we increase our opportunity and get in at a lower price, and then trade systems that are more relevant to the current market conditions. So we get all three of those working for us in the same way. Let's look at what it did this month. 148.75. It lost in January, pretty much broke even this month. And so there is the new portfolio. Current subscribers can trade either one. I will send you both files. You can have the current strategies plus the two new strategies to trade, and I will let you make that decision what you want to do, but this is what I recommend. Also, I want to take a look at a new portfolio. The new portfolio for this month that I'm adding is everything Viper. So we're going to have a Viper portfolio. What we're going to do is we're going to simply take out everything that's not Viper. Boom. The Vipers have been doing very well. We get this 1948 is return over drawdown. There's not as many systems. The drawdown's about the same. The current drawdown is 1368.75. I'm going to make the monthly lease fee 150. There's only 5 strategies. So when you keep this in mind, when you use the calculator and you look at individual systems and combinations of systems, take this monthly lease fee out, especially if you're looking at one system. If you keep the monthly lease fee at 250 and you look at one system, there's going to be a big difference. You want to change that to 50 per system when you're looking at the monthly lease fee and looking at just individual systems and portfolios. And there's discounts for multiple systems, so ask me about that. But Look at the results of this portfolio. Vipers did very well this month, 43, 48, 75. They're having a good year. Historically, this portfolio has done well. You have interest rates with bonds, currencies. You have crude energies, and you still have the stock indexes. Look at the drawdown curve. It's not as cyclical. You have less systems. You have some sharp drawdowns, so you have to be ready for the risk that this portfolio could see in those sharp drawdowns. But the Vipers have done well in this portfolio in this market environment the last few years. If you look back, starting in 2007, fairly consistent returns. Not bad in 2005, 2006 either. And Viper's is a system that originally designed for the stock indexes in 2005, and so applying that to other markets. There you have the Viper portfolio. You have the new Capstone portfolio 2010, and those will be on the website. Let me know if you have any questions on either one of those.